Welcome to this video day. It's Tuesday. It's 26th of September, 1:30 p.m. GMT. What we're going to be doing today is updating a couple of trades we looked at in a video last week, which are AUD, USD and USD CAD. Now, last week we were saying we expected the dollar to firm up significantly on both commodity currencies. It's firmed up a little bit, okay? But we think now we're getting ready for a major move in the dollar against both commodity currencies. Now, in terms of the setup, regular viewers will be very familiar with it. It's basically trading breakouts through key levels, okay, and looking for follow through, okay, either buying or selling. And when we're doing the technical setup, what we're doing is we're measuring the sentiment behind the chart to give us clues, not only to which direction the breakout is going to occur, but how strong the move might be. The tool we use is the COT Net Traders Positions. If you're unfamiliar with it, it's the best tool in Forex trading in our view. You can watch more about it in an explanatory video beneath this one. But if you just want to watch the video through right now, basically in brief terms, what we're looking for is smart money commercial hedgers to buy or sell aggressively against speculators. Now, this present time, the commercials are going heavily long the dollar. At the same time, the speculators are going short. We see a break in favour of the commercials. Now, in terms of measuring the sentiment behind the chart with the COT, gives you real confidence to take a trade, okay, and also hold a big profit. Okay, many traders, of course, bank their profits too early. Now, in terms of the COT, when you get divergences like the ones we're going to look at in a moment, you're looking for 300 to 500 pip moves. Okay, now in terms of this, I'm also going to cover GBP AUD, which is a trade we did a couple of months ago. We did a video on it. It's already up, I think, around 700 pips. I think there's far more to come, and we'll be looking at that setup as well. Now, in terms of my view, on the charts, when we look at them, it's my view as of right now. If you want our daily technical analysis of major Forex pairs, you can just simply click on the link beneath this video. So, right, let's go and look at the charts. I'm going to start with AUD USD, and we're going to start by looking at the commitment of traders' positions first. Australian dollar against the US dollar. Just very quickly look at the COT Net Traders positions before we go and draw some levels. We've had an interesting move this week. We're above the 60,000K in longs from the speculators. But before I discuss that in a little bit more detail, just very quickly for new viewers, I'm just going to go through very quickly how we trade divergence between the large speculators and the smart money commercials in red. We want the speculators to build up big position one way, commercials the other, and then trade with the commercials. You can see here, speculators, big long position, nice break down of around 450 odd pips. This one here, another speculative long position builds up with commercials dropping short against them, shallower, about 200 pips. And then the next one, build up again, commercials drop against them, 350 pips. And now we've got a big build up in large speculative longs, commercials dropping short against them. Both added to their positions this week, and the speculators are now above 60k in terms of their longs. Now, in terms of the divergence we've got here, what it points to is a major move to the downside. When you get divergence this big, if you go back historically, you'll normally see a break of 500 pips plus. I think we're already topping out this peak here above 81, down at 79. There is far more to come on the downside in our view. So let's just go and draw some levels of entry, stop, and USD target. Daily chart. If you just look at this as a purely, from a technical standpoint, it just looks like a messy sideways channel since July, really. But when you know the COT, you see things in a kind of different light in terms of the technicals. And while it's a sideways action and choppy at the moment. It's getting ready for a big breakdown. I'm just going to go through quickly for new viewers how we've been playing this trade. Now, when we started to move up here above the 80 level, you know, the speculators really started to buy hard. Commercials really started to sell hard. We were saying we didn't think this red candle here, the tail I've got in July, would be taken out on a closed basis. Okay, poke above it and come back through. We view that as a sell. So we're going to come in on this red candle through 80.40, and I thought actually we'd run aggressively to the downside, but what we do is we come down a bit, we find support at the 20, come through the 20, then we just started to find support on it again. So like 79.70. Yeah, I've decided, just to take a small profit, just in case there's another spike higher. Look to sell higher if possible. Now, it's only a 70 pip profit, but just playing it safe. Did spike higher. I wanted it to go through 81, then immediately sell back through the level, but that didn't happen for me. It came back, it settles blue. So the next high odds entry, saying it in the last video, is going to be through the 20-day moving average. Now, keep in mind, this spike has not got as high as this one. It's also failed, and we've got even heavier speculative buying here and commercial selling than we did back here. So for us, the trend is exhausted. We'll come through the 20-day, and that's what we did. And slice it through nicely. Nice red candle, come in at 79.70, come back to test it. We can't get through it. This one can't get through it and falls away. Now we're at 79. So again, it's only a minor profit. Now, what I want to do today, and I'll update later in the member center, just see how this trade goes, because I really want to see it take out support. We're trading near the lows at the moment. I want to see these candles give way. Okay. So really, this level, want it to give way. If it doesn't, what I might do is just bank out and sell through the level or sell back to resistance at the 20-day 80 level. But looking for a breakout. If it does break out, we are going a long way to the downside. Now, the first obvious level of support is going to be 77, which would generate a nice profitable trade if we get down to that level. But knowing the COT and the setup we've just seen in terms of positions, we could easily run down to 75, okay, because the positions are so extreme historically. Now, if we do break out, stop needs to be behind the 20-day moving average. I tuck it behind the round number, the 80 number. So you've got the 20-day moving average, which should provide resistance. Your stop is a little way back. You generate yourself a 3-to-1 in terms of risk-reward trade. Now, if we do break lower, okay, these two candles in my view won't provide support. There's too many speculative stops waiting to be hit. We'll see, obviously, how this one pans out. But now let's move to the USD against CAD, and we're going to again start with the COT net traders. The US dollar, and with the COT net traders, is always the foreign currency first. We're, of course, trading USD CAD. I'll reverse the chart around in a moment when we do our levels. Now, just very quickly, just want to focus on this big, commercial long position against a big speculative short position. And this very important low down here. Then we get a move to the upside, a little bit of a pause, and then another move up, just coming off, the highs. Now, what's interesting about this is the commercials catch all of this big move up here, and the speculators get hurt. Okay, speculators then start to build up their net long positions. Okay, on this dip here, and start to buy aggressively. And what they've done effectively is they've built up a 5-year net long extreme. The commercials have gone to a 5-year net short extreme against them. Now, what we think is going to happen here is we've already seen some decent downside in the CAD. We think there's a lot more downside, and we think the USD CAD is going to have a really major rally. In terms of risk to reward, we think this is a really good trade. So let's go and draw some daily chart. And in terms of yeah, the move down in the US dollar, it's obviously been a big move down. You can see it here, a little bit of a retracement and then an accelerated move to the downside. Now, what we noticed on the COT positions was that once this candle, fell back from 124 through 122, commercials increase their buying and speculators increase their selling. So, Bank of Canada hike rates, that's bullish for the Canada, get some follow through. Then we find support. Now, for us, we had an aggressive entry. As soon as we had this blue candle here, we're going to come in 121.65. We don't see really any significant downside, because the speculators have all sold. And we do come back to test the 121 level again. Then we bounce off. We work our way up to the 20-day moving average. Now, we always look for the 20-day average to basically break in a situation like this, because there's so many speculators short. I mean, normally it provides decent resistance in a downtrend, like it did here, for example. Okay, you got one move above it here, but all the way down when the USD was falling hard, the 20-day was holding rallies. Rallies weren't able to get above it because there's so many specs short. We expect to break, get through it, settle on it, below it, above. So we've now cleared the 20-day moving average. We're sitting just below 124. So we've got a decent profit of 235 pips. What are we going to do? We are going to bank in half our profit, and we're going to wait to see if we can clear out the round number. But what we really want is these three candles here to be cleared. Okay. So you're really above 124.35. We get above that level, we know we've got a big number of speculators, and there's going to be a lot of stops to be hit. So first level of resistance up here at 126, don't think will hold. We'll see what happens if we do break out, but I've got my eye on that level there, 27.80, and then 130. Now, where would you place your stop? Well, you're looking for a breakout and follow through. The 20-day moving average has been taken out. It should now provide support. Sits right on a round number. So just behind the round number, I would say about 122.65. Okay. So, if this breaks higher, you've got a good risk to reward. You can see if the breakout follows through. If it doesn't, you always cover it. But I've got a feeling, because there are so many specs short, 127.80, then 130. It could be, and I'll stress the could be a really good move, but the risk reward on it is really decent in our view. And looking for this one to be a nice trade. We'll see how it pans out. And let's move to the last pair we're going to look at, which is GBP AUD, which has already seen a great move, and there could be more to come. So let's take a look at the chart. We are on the British Pound Australian Dollar daily chart, and we looked at this a couple of weeks ago. We expected a big breakout in the British Pound to the upside, and we got a big move up. Okay, going to update where I think this pair is going from here, and also want to go through how we played this trade and how the COT can really give you confidence to hold a big trend and be alert for when one's coming. But first of all, let's take a look at current COT net traders positions. Non-commercials 4.5 to 1 in terms of shorts over long, so still very bearish despite the big move up in the pound. Commercials are bullish, 6.7 to 1 in terms of longs over shorts. Divergence between the groups is 11.2. It's above 10, so that's a good divergence on the COT. Now, just one point, there is no COT data for the crosses, but you create it yourself. It's very easy to do. Just total up what both groups have got in AUD, USD, USD CAD, and you got the cross. Now, in terms of playing this trade, we notice down here 162 divergence between non-commercials and commercials widens to 15 to 1. Non-commercials selling heavily here, commercials buying against them. We start to hammer out a base, okay? So we're alert for a buying opportunity. What we notice is the 20-day moving average is holding the advance. See how well it holds it here? All these touches, you get couple of pokes through, but it won't take out the 20-day. This candle does, okay? It double bottoms with that candle tail and aggressively moves through the 20-day moving average. So we would buy, coming at 163.50, and because we know there's so many speculators short, we know we're probably going to get a big move. You can't see that just purely from technicals. We get a big move, we go all the way up to 170. Now, of course, so we get up to 170, you got a good profit, okay? You've got 650 pips. So what do? I mean, the temptation is always to take a big profit, okay? But yeah, when you're trading in the COT, you've got confidence to hold. We think this pair is still going far higher. So what we'll do is we'll take 50% of our profit and we dropped it back in. I want to see this 168 level hold. Come back in at 168.50. So we've got an extra 150 pips in the bank. And we go up to 171, we come back a bit, and now we're just slightly sideways at 170. So basically, we're holding at the moment with our stop at 167.60. Okay, so basically, we're going to come out with around, well, more than 500 pips if we're stopped out. Okay, but what we're going to do, I'm going to see how this one unfolds. We might bank 50% of profit in again. But what I think is going to happen is this level should provide decent support. And I think we're going to take out the 171 level. And I am extremely bullish of GBP AUD, sorry. I think we're going all the way up to this level here, which is sorry, I haven't drawn my line straight, have I? Why can't I get that straight? There we go. So all the way up to 175. So whatever happens, we've got a decent profit already. If we get up to 175, of course, we'll have over 1,000 pips in profit. And I think the real power of the COT is just giving you that confidence to hold big trends and not be panicked out of them. Also, it alerts you to a big move coming. So when you got this tight sideways action, from pure technical perspective, it gives you a tight range, but you don't know which way it's going to break. When you know the COT, you know the break is probably going to be the upside. It was the upside, and that's a really good trade. Now I'm hoping, obviously, that AUD, USD CAD do something similar. So we'll see, and we'll update these pairs in another video soon. Thank you very much for watching as usual. Take care. Have a good day.